Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, February 24th, and this is the weekly market report. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I'm not a registered financial advisor. I cannot give you personal financial advice. Please do your own due diligence. It's your money. It's your responsibility. Okay. I have a little bit of temperature changes around here, back and forth, cold to hot. So I don't know if I have a cold or something, but anyways, if I'm coughing and hacking, I apologize. But just kind of came on over the last couple days. So I am bullish on gold. I have said that I think for the gold stocks to really move higher, we're going to need to see interest rate cuts. We've shown data before that if you have rate cuts, how gold and gold shares respond. Nevertheless, we've continued to see movement into some gold shares, like we reported last week. Stanley Druckenmiller's taking small positions in Newmont and Barrick. But I wanted to point out from this roundtable discussion that I watched the other day on YouTube, was Jeffrey Gundlach made this comment, and I think it's appropriate to keep this in mind. Again, is this necessarily actionable right now? No, but I think it is in the background and will end up being a catalyst ultimately for higher gold prices. And so what does he say? The U.S. deficit has been going up, and it's been going up because of higher rates, interest rates. 17 trillion of treasury bonds come due in the next 3 to 6 months. The average interest rate on them is well below where interest rates are today. A lot of them are at 50 basis points, and if you have to reinvest them at 4%, you got an arithmetic problem. So this is what we've been saying, right? I'm not necessarily going to say and be a Cassandra and say that this is going to be the debt crisis. But if you look at the news this week, when they had the 20-year Treasury auction, it did not go well. It was one of the worst auctions in a long, long time. What am I saying by that? Because what I'm saying is when you do a Treasury auction, the way I understand it at least, is that people say, okay, the Treasury will say we're going to have this many bonds at this term, 20 years, what have you. Say it's 10 billion. I don't know what it was, but let's just say for discussion point. And then people bid on the interest rate. They say, okay, I bid 4.56%. Somebody might say 4.44. So the Treasury receives all these bids, and then the bid that to clear to sell all those bonds, whatever it ends up being, it ends up all the bidders get that bid. So you end up basically happening is you end up having higher interest rates, right? Because you're not getting sufficient bids, and then the bids that you are getting are there's big spreads between them. And so when finally to clear to sell all those bonds, you have to give a higher interest rate. That's what I'm trying to get at. And so that's what's starting to happen, right? You're getting into a situation where bond people or investors are going to say, wait a minute, you're currently running 6% of GDP deficits, right? You're running, typically in a recession, which we inevitably will have a recession, regardless of the fact that we haven't had one recently or predictions for one have been wrong. We will eventually have one. And when we do, the deficit usually goes like 5% of GDP. So if you're already running 6% of GDP deficits already in non-recessionary times, you have a typical recession. You could be running deficits somewhere around 12% of GDP. And so people are going to start going, wait a minute, what's going on here? These people are out of control with their spending. And I need a higher rate of interest to protect me against that risk. And so that's what I think is going to start happening. And so I'm not saying it's going to be a crisis. I don't know what will happen. Ultimately, what will happen is I've said this before, I see no, I got in the weeds a little bit there. Maybe that was probably not good. But anyways, What I'm saying here is very simple. I see nobody advocating for controlling spending. And so spending's out of control. And so we've seen throughout history that when governments have this kind of flagrant disregard for staying within their means, they they always end up back at the same place, which is currency debasement. And so I think that even with rates moving up now, I mean, at some point, with the inflation rate being whatever it is now, looks like it's stuck now and it can't get down to 2% possibly. Is Mr. Powell going to have to throw in the towel and say, we can't be rolling all of this debt at 5, 6, high fours, low 5% interest rates. We can't do it. Or the interest is just going to consume us. So are we in a situation where the Fed's going to have to be the buyer of last resort? It's going to have to push rates down, and it's going to have to do that when it's quite possible that they haven't hit their 2% target. So I think it's something to keep in mind. This is a very smart guy. He knows what he's talking about. Again, we don't just say, well, a smart guy said something, so we believe it 100%. We just take it into our thought process and say, okay, is this a reasonable argument? And then how does the data play out over time? So we'll have to just watch it. Again, um, we'll see what happens. But it looks like we may be in a situation where they won't be able to get rates down to what they wanted to, or excuse me, inflation rate down to 2% target. And they're going to have to accept a 3.5, something like that, and then start another rate cutting cycle just because of the fact that the debt is so far out of control. And, as you roll this debt into higher rates, you're just going to be consuming the entire budget with interest payments. It's, as he says here, right, just like he says here, you have an arithmetic problem. That's what we've been saying. So Game of Trades, again, follow them on X. Really good charts. So bank credit is contracting sharply. Bank credit, all commercial banks, negative. Not good. Last time it went negative, great financial crisis. So we'll see if this continues. Again, we can get into the battle of, statistics. But again, I look back at history. I'm no genius. It's pattern recognition. What happened last time it contracted like this? Okay. Maybe if it bounces and goes back up, we avoid a problem. But last time this happened, we had the 2008 great financial crisis. This is another one. I mean, again, Game of Trades, follow them on X. Good good charts like this. Give full credit where credit is due. Credit card defaults at record levels. Credit card defaults from small lenders at records. Delinquency rates on credit card loans, banks not among the 100 largest in size by assets. So these are the smaller banks, right? And so what do we have? We have a record level of delinquency on credit cards issued by these smaller banks, far exceeding what we have seen going in at the pandemic highs, which was self-inflicted. But look back at the GFC and also at the tech wreck. We're way above that. So you can see that in other periods where we've been at these levels, we've been in recession. Again, it may be rolling over. I don't know. Maybe it's taking a pause and it's going to move higher. The point is that, as I've said before, I believe that, when you're in an economy with 70% consumer spending is a consumer-based economy, and if the people run out of money to spend, then you're going to be in a situation where the economy is going to possibly get itself into trouble. So we'll see. So this is another thing, another Game of Trades tweet. That's 3 tweets in a row. Real gross domestic income, not gross domestic product, but gross domestic income has just entered contraction territory. This has only happened 12 prior times since 1948. Every single one of them occurred around a recession. So again, say what you would like to say. This time's different, what have you. I think that, you know, this, people will say, well, the economy, jobs, and yeah, but I think that if you look at what a lot of folks have been saying on earnings calls and things like that, um, you know, I don't have a measurement of it, but I think what I've heard, people are getting nervous. Let's put it that way. You have executives and companies selling shares at, pretty good clip. You have people talking about cost cutting on conference calls, things of this nature. Again, I think once the tip in employment comes, it happens pretty quick. So we'll see what happens. But again, pattern recognition. So if I gave you $1 million and said, look at this information, and you see that every single time that gross domestic income went negative or went into contraction, it's done it 12 times in the post-war era, post-World War II era, and every single time of them, it happened around a recession, and you had to bet the $1 million. It's a binary bet. You can either bet that we'll have a recession or we don't have a recession. What would you bet? Well, I mean, you could say that the other 12 times it's going to be different this time. I don't do that. That's not how I do things. So it could be, very well could be this is different, that things have changed. I know Jim Bianco makes a lot of these type of arguments that after the pandemic, the way we live our lives, the way we work, all these things have changed, and it hasn't fully worked its way through the economy so that we can really understand how the economy works now. But I'm still of the opinion, I kind of go with what David Rosenberg says. The business cycle has not been abrogated, and we are probably looking at a recession in the United States. If we're, and it very well could be possible that I've heard others make the argument too that we're having like a rolling recession. Different sectors are not doing well, but other sectors are doing well. So that's an argument that's being made also. We'll just have to see how it plays out. Again, I don't try to forecast, I nowcast what's happening in real time, just so I can get a sense of when the Fed's going to pull that bazooka out, because when they fire that bazooka the next time, I think it's going to be very relevant for a lot of the resource stocks. Obviously, the dollar will take it on the chin. A lot of liquidity will be created, and I think a lot of the resource stocks will do very well in that type of environment. That's why I care about it. Trying to understand, are they putting it back in the weapons locker, or are they pulling it out and preparing it to fire? That's kind of what the whole intent is. So this is interesting. I point this out. I think I did mention this the other day, but global manufacturing PMI is rising. It's been under 50 for over a year, well, around a year. And so now, what I have said is basically around this time in July. I'm just saying it just happens to correspond, but this is when I notice, I track central bank actions of all the central banks around the world as best I can. There's various websites I use. And so what I noticed, because of the post-pandemic inflation that we saw around the world, most central banks were raising rates aggressively to get the inflation under control, especially in the emerging markets and a lot of foreign markets. And then I noticed a pattern that around summertime, around this June, July time, it kind of plateaued where you had an even amount of central banks beginning to cut rates, and some still raising rates. And then since around this July, August timeframe, we've seen nothing but a preponderance of month-to-month increases in central banks around the world cutting rates, okay, and less central banks raising rates. Now, obviously, the big hitters out there, the United States, the ECB, yes, they have stopped raising rates. So that's what you do, right? You raise rates for some period of time, then you pause for some period of time, and then you go into the next rate cutting cycle, however long it takes. Typically in the U.S., I think I saw some data before. It's typically 8 to 12 months, something like this. I don't remember. Nevertheless, the rest of the world, though, is accelerating. So we're entering a new liquidity cycle. And so we would, that stands to reason that we would have increases in manufacturing activity as, demand picks up, as, these banks, increase the amount of liquidity. And we're seeing that, in some interesting economies, especially like, this is why I'm very bullish. I've been very bullish on Latin America. If you look at what's going on there, they were very quick to start raising rates before a lot of folks. Also, a country like the Republic of Georgia, they raised rates aggressively. And then, these countries were the first to begin cutting rates as inflation in those countries did decline. So they had these tremendously positive real rates. And so they've had a lot of room to lower rates, and that's been very positive. If you look at some of the economic activity in some of these countries, it's picking up very, very quick. So the reason I bring this up is that pretty good chart from Top Down Charts, somebody else to follow on X. They put this up. I thought this was interesting. Global or commodities versus global manufacturing PMI. You can see the blue is the global manufacturing PMI. You want to make sure it's manufacturing because there's a services PMI also. But as I've said before, anything above 50 indicates expansion in manufacturing. Anything below 50 indicates contraction. And so what this person has done with this chart is then taken the S&P Goldman Sachs Commodity Index and overlaid it. And you can see there's a definite correlation, which makes logical sense. As manufacturing picks up, the demand for commodities picks up, and typically the price will pick up also. So this is another reason why I am bullish going forward on, because I think that the world has entered a new liquidity cycle. It's just a matter of time before the ECB and the US enter the arena. And as I said, more and more banks are cutting rates around the world. And if you go and look at a lot of these countries, which I do, and there's plenty of websites that you can go get the data from, and look at their current inflation rates and look at their current central bank rates, like in Brazil or Colombia, like I mentioned, the Republic of Georgia, some of these places where I'm interested, you see that there's tremendously big room to further cut rates just because they have tremendous amount of high real rates because of the fact that they raised rates so aggressively, and inflation's really collapsed in some of these places. It may be sticky in the US, but again, it's country by country, right? You have to look at things. And so I think this is an interesting thing to look at. Obviously, if we go back to the manufacturing PMIs, look, it's not like you have to look at it over a period of time, right? It's increasing over time, but month to month, it's bumpy, right? But this is where you're at. It could very well drop below next month and then go. So you want to look at it as a trend, I think, not necessarily, well, this month it was improving, then this month, oh no, sell everything, buy. You don't want to do that. You kind of want to look at it as, okay, we're over 50. We're at 50, basically. If it increases, the trend is moving higher. Rates are coming down around the world. That should spur economic activity, hence, commodity demand, but we'll see. So I wanted to point this out. This is from Lynn, Alden. We want to give credit where credit's due for these fine charts that people do that we, steal off Twitter. But this makes an excellent point. We talked about this last week just in numbers. We just made the comment, but she's made the chart here where so Nvidia now has the market cap of approximately 4.5 exons. So I'm sure that AI, I use AI. I think it's cool. I've used it for generating all kinds of things. I thought the internet was a big deal too, and it did it did change things. But is Nvidia really worth 4.5 exons? Would I rather have own all of Nvidia, or would I rather own 4.5 Exxons? I'd rather own 4.5 Exxons, because 4.5 Exxons has tremendous billions and billions in cash flow and billions in dividends and buybacks every year. And that's what's important to me, because Nvidia is a technology company, and they very well are probably the best at what they do. I don't know anything about it, but you know, energy is the basis for life. For Nvidia to do what it needs to do, it needs energy. It needs electricity. It needs transportation fuels to move its goods, what have you. And so, personally, I like cash. Okay, and when I see something like this, this tells you all you need to know. Okay, I sell overvaluation and I buy undervaluation. Now, is there some possibility? ExxonMobil is never going to do a moonshot like this. It's not something that I would buy and hold. What I would do is, when it's tremendously undervalued or underrepresented from its historical norm in the S&P, that draws my interest. I would suggest to you that we've seen this before in the .com. If you weren't around, you need to go back and look at some of the charts. You need to see what happened. This is the same kind of hype that was around a lot of other companies, okay? JDS Uniphase, Cisco. I mean, I could just, there was a lot of other wacko stocks, okay? They had the same type of narrative around them. That didn't mean that they didn't have good businesses, they weren't technologically savvy, but in the end, it doesn't matter, because if you're paying too much money for something, you don't have any value there. And so then you get into the situation where you're just speculating on a higher price that you can find a greater fool. And that's fine. There's momentum traders, there's people that are successful doing this. As I've said before, that's just not the game of the Actionable Intelligence Alert newsletter. Me personally, if you said I could own Nvidia or 4.5 Exxons, I'd take the 4.5 Exxons, just because I think that, like I said, there's more value there. So this is kind of what I was talking about. I put this .com bust 2.0, Jesse Felder. He's talking about a comment that somebody made. I think it was, I can't remember who it was, but anyways, it says, narratives have the advantage of being largely true and the disadvantage of being entirely reflected in current share prices. So betting on a narrative is a useless way to invest. And it goes back here. It says, this is kind of related to this article. This is a clip from the article in the FT, but it was relating back to what happened during the .com bust. And I don't remember who it was, David Kotok, somebody that was around then. But anyways, this is exactly the thinking that I agree with. I think the same thing is happening now with AI. The narrative with .com is that this is going to change everything: how we buy goods and services, communicate, research, socially interact, run businesses. All true, but all have happened more gradually than initially expected. Substitute AI for internet, and you have exactly the same narrative today. It's a classic example of a big market delusion, not because it's wrong, because it will happen more gradually than people expect. And that's my view on this. And AI is going to change everything in ways probably we can't even anticipate, but it's probably not going to happen in a year, and it's probably not going to just be focused on the companies that you see now may or may not be the beneficiaries of that. And if you're pricing all of this in to Nvidia, then you had better be right, I guess and we know from the historical narrative that even companies like Microsoft and Cisco, successful companies in the .com era, because they became so overvalued, they basically had no return for over a decade. Okay. Once we had the bust, they just went sideways for years, right? And that's what can happen. And that's why, if you're a tech guy that knew about Nvidia and bought it early, congratulations. But if you're somebody that doesn't really understand it, you just say, well, AI, man, you don't get it, boomer. If that's your view, that's your argument, then you're speculating. And that's fine, again, as long as you know you're speculating. But, if you walk down the street and find $100 bill, you got lucky. It's not because you're a good investor. Again, here's Tavi Costa from Sprott Capital. Price to book, U.S. versus rest of the world. Here's the U.S. price to book. Here's the rest of the world, ex-U.S. I mean, these are like extreme differences in valuation over decades. So I'm just not interested in buying things that are overvalued. And we try to look for things that are undervalued. There's so much undervaluation around the world. I mean, let's use this as an example. I haven't really entered this into the newsletter because it's kind of really hard. I've dabbled a little bit myself, but the Japanese market just made a new high in the Nikkei, I think this week. Yeah, I think it was this week. And so I was in Japan at the height of its bubble, okay? And I mean, I loved it being in Japan. This was in the 80s, and I thought it was just tremendous. But the overvaluation, I mean, I can't even look, the statistics were 1 acre of like downtown Tokyo real estate was worth something like the entire city of San Francisco or some crazy metrics like that. So it was obvious, right? So it took 40 years of wringing out all that. And so we finally have the catalysts in Japan. What do we have? Right. The Ministry of Finance and the Tokyo Stock Exchange, they're forcing or trying to force these companies to do things to focus on return on investment, unlock these, buy back shares, shareholder, benefits of the shareholders, changing their retirement plan contributions, trying to get things, moving from being less sclerotic and starting to have an effect. And so you can find stocks in Japan that are selling for 30, 40, 50% of book value, that some of them, I mean, what they call nets, where you have more cash and assets on the balance sheet that are sometimes 2 times more than the capital or the market cap of the company, all kinds of crazy stuff like this. And so you're seeing it being unlocked. So I would rather, be more inclined to be looking at a market like that than I would be the US market, which is historically overvalued. The same thing that you have with some of these companies like in Latin America, there's tremendous values available. The company I talk about in the newsletter that's in the Republic of Georgia, I'm hesitant to call it a mini Berkshire Hathaway, but it's basically a company that invests in companies there. And, it consistently raises book value, increases the value of the company year to year, and it's selling for half of book value. And what are they doing? They're buying back shares. We have we have a company that does the same thing in India. It's substantially, undervalued. You can buy it for substantially less than book value or 1 times book value. So, same thing. Management's buying back shares. So I'm content to sit there and, buy things that, I buy $1 for 50 cents or 60 cents. And that's worked. It doesn't work at a large scale, but it does work for individual investors. You're not going to move that market. You can get in and out of these companies and these stocks, as there's usually small to mid caps, and you can get in and out of them. So there's opportunity all over the world. This chart shows you. And so I think this to me, this is an opportunity. Either this comes down and Matt gets closer to this, or this moves up while this moves up, or what's most likely, this moves down while the rest of the world moves up. So, or some combination thereof. So I think that's really an opportunity. Again, I go back, I try to keep it as simple as I can. I've learned this. I used to look, it's not like I'm sitting here pontificating from Mount Olympus. All you little stoops out there that are buying Nvidia or trading on your phone at your lunch hour, you shouldn't do that. I did it when I was younger, okay? Because I wanted to get rich. I wanted to make money, okay? And I thought I could beat the market that way. That's not how you do it. Unfortunately, you can learn through other people's experiences. That's why I took the time to try to understand what all of these wealthy people that we've talked about before, they all have all their writings online or on books. Read it, and I started realizing the same consistency, which was basically buy undervalued assets that have some type of catalyst that's going to take them from being undervalued to, at least fair valued. And don't buy, overvaluation. Sell things that are overvalued. Okay, because the historical norm is, we know that if what you pay for something is, pretty much is going to determine quite a bit of what your return is going to be. Okay, it's not everything, but it's, if you buy things that are overvalued, if you wait long enough, yeah, but we're all going to die at some point too. So, if you would have bought the Nikkei at the top, you had to wait 40 years to get back to even. Well, 40 years is an investing lifetime. And if you need to put people through college, if you want to retire, if you want to have, other things going on in your life, you can buy and hold and wait 40 years and you would have got back to even. You would have been, basically your purchasing power would have been down because of what you lost from inflation. So I found that this has given me success. And again, I go back to telling people to temper their expectations. You have to have expectations that are consistent with reality. If Warren Buffett's Berkshire Hathaway, or some of these other famous investors are, being lauded for having consistently 15 to 18% per year multi-decade returns, what makes you think that you're entitled to or going to achieve hundreds of percent returns every year? It's just not going to happen. And if you're out there trying to do that, you're going to be taking enough risks where eventually, you can, I think somebody said this the other day to me. I thought it was a good analogy. You can walk through a dynamite factory with, a lit torch. It doesn't mean you're necessarily going to set the dynamite off, but it does mean you're an idiot. So I don't, and I'm not saying this is a pejorative. I had to learn these lessons also, guys. I'm just trying to, I'm telling you what works. It takes time and it takes effort and it's not easy. Okay. You can get lucky. I got lucky many times and then you give it all back. And you're like in this cycle of, chasing the shiny object, chasing the dream, if you will. And if you look at the most famous investors that are where you want to be, I guess, or at least to change your life, that's what they did. They bought undervalued assets, okay, and they waited, and they did the research and they understood what the catalyst was. And if it didn't, you got to remember something. All of the things that you invest in, only less than half of them will turn out the way you want them to. Many of the stock picks just don't work. Okay. And you got to sell those. And but what does give you the ultimate market beating returns as an active investor is what? Is the ability to buy things and then hold them. And then when you do get, over a 3 to 5 year period of a 3, 5, or 10 bagger, that makes up for a lot of other mistakes, right? So, and the way that you can further increase your odds is not buying things that are overvalued. So I kind of droned on about this, but I mean, I just think something bad's getting ready to happen here with some of these tech stocks. So GMO, again, they come out with the 7-year asset class forecast. This is the most recent one that came out this week. You see that their 7-year forward asset class, 7-year forecast, again, emerging value, emerging markets, and you see what they're most pessimistic on: U.S. large cap and U.S. small cap. So, I mean, you can say what you like, but this isn't like somebody's opinion. This is kind of like based on valuation metrics, right? That doesn't necessarily mean that the U.S. stock market can't go higher. It very well could. Okay. But over the next 7 years, this is what things are looking at. Look at like even emerging market debt is very, very lucrative. Why? Because if you have a country like Colombia or Brazil or one of these countries like this, lowering rates and you're able to buy that emerging market debt, then, the price of those bonds is going to go up, right? And you could say, well, there's currency risk. There is currency risk there. But if the U.S. ends up cutting rates also this year, which I believe they will, then you don't have, that kind of mitigates things. So, again, sell overvaluation, buy undervaluation. So I wanted to put this out there. We talked about Druckenmiller getting into Newmont and Barrick last week, dipping his toe. Now we have Elliot Management. This is a tweet from Calvin Froedge. Elliot Management YOLOing $1 billion fund into precious metals and battery metals. This is just a snippet from the article. Elliot Management is setting up a company to invest at least $1 billion to buy mining assets globally as it seeks to take advantage of the depressed valuation of groups operating in the sector. People familiar with the matter said. So there you go. We're starting to see the smart money move into these areas. Now, that doesn't guarantee that they're right. That doesn't guarantee that we should just do what they're doing, but I think it's an indicator, right? Again, these are smart people that have been, successful over time. So it behooves us to at least understand why they're doing it. Okay, so let's get into this. What we do here at the weekly market update is, just report the news for the week. Okay. And so you're going to get a lot of the whatever's hot, whatever's in the news, right? And so I give my comments. Most of the time, that's usually positive stuff, right? Because if something's moving, it's going to be in the news. And so, we end up talking about it here on the weekly update. Uranium, spot dipped under 100. I guess this is something I pulled. This may not be the most current one. Pulled it off Twitter. It's like indicated like $90 a pound. So uranium fell under 100. Everybody sell. The uranium bull market's over. Well, I'm just saying that facetiously. Guys, do I have to say anything about this? The amount of hand wringing and upset stomachs. I mean, Maalox sales must be going through the roof. Guys, you're in a uranium bull market. There's like so many accounts now on X. I don't even know how they make it into my feed. I never even heard of half these guys. Okay. This uranium bull market sucks. They have some kind of uranium name, uranium, whatever, World Star uranium. I don't know. They got all kinds of this. I never heard of these guys. And, this sucks. Again, it's the sentiment. The sentiment now has turned negative because what happened? So much money and so much hype came in. This is what happens in this type of market. It's volatile. I was going to go through this exercise again, but I'm not going to do it anymore. Go back to the last bull market. They have charting services free. Go back and look up companies that existed during the last uranium bull market. I think I actually did this exercise with a company called Mega Uranium, which still exists. No, I'm just telling you this story for illustration purposes. And I think I went through on a slide and pointed out on its trip over its like 1,000+% move during the last bull market, the thing had like 4, 5, or 6 drawdowns or pullbacks of 50% or more, or something crazy like that, right? So this is what happens, guys. It's a small market. It's mostly retail, okay? And, things fluctuate. You have volatility. A lot of money came in, a lot of hype around Kazatomprom, Cameco, Orano, all these people reporting. So everybody flooded in, right? And the hype machine starts going. It pulls in more money. And then, inevitably, you're going to have a sell-off. You're going to have a consolidation. Am I selling? No. Why would I? The fundamentals continue to get better every week, every month, And so I'll say this, what I say normally. What do you do in a bull market? You should already know what stocks you like. And if you like them at company X selling at 4 and it's 3, well then, if it looks like it's going to bottom, I mean, you don't want to catch a falling safe. If the thing catches a bottom and starts going sideways, and it's at 3 or 310 or You got to buy more, don't you? I mean, if you liked it at 4, don't you love it at 3? I mean, I don't get it. This is exactly why I pointed out the research about the CMG fund and the Magellan fund. These are the best performing mutual funds during the bull market in the 90s and early 2000s. Used to have ads on CNBC constantly about Ken Hebner CMG fund up 18% every year. And they did research on this. I pointed it out in the slide. And the average retail investor that invested in the CMG fund lost money over that time. Why? Because they kept buying at the top when the news was positive and selling at the bottom when they became despondent and the price was down. And that's what a lot of people are doing now. Yeah, but John, the uranium stock that I bought that I was dreaming about that was going to get me that, house in the Bahamas didn't do what I wanted to do when I bought it. Well, these things are not, your slaves and do what you want them to do. I go back to what I said before. Do you have a thesis around this trade, around this investment? What companies are you buying? That we're starting to see the proliferation now of uranium stocks or uranium companies. They're starting to pop up like mushrooms. I don't know what you're buying. I said it before. What are you buying? How have you not made money over the last 5 years when some of these, I think Cameco's up, what, 4 or 5x? How have you not made money? So again, you're in a bull market. You're in what I think is the best fundamental setup I've ever seen in the resource market long term. I've never seen anything better than this, even the last uranium bull market. And so it's very simple, guys. You can trade it if you'd like. One guy said on Twitter he has 2/3, he has a position, 2/3 is core, he doesn't touch, and 1/3 he trades. People can do that. I don't do that. Okay. I got into this thing very early. I have tremendous gains. I'm not going to be trading this thing. I'm going to wait for a culmination event, a blow off top, which I think is coming. I think a musical chairs event is coming, where somebody's going to have to come and say, we don't have enough uranium. We're going to have to derate this unit or put it in or shut it down for a period of time. And I think we're going to get a blow off on this thing. But I do believe in, economics. I did take micro and macroeconomics. If the price goes high enough, sufficient supply will come online. It just will take a long time and a lot in billions of dollars. And so until that happens, I see no change in we are in a nuclear renaissance. You're in a growth industry of people building reactors now, which 2 years ago wasn't even on the table. A year ago necessarily wasn't on the table. Now it's the new zeitgeist. Okay, so you're going to see all these new reactors come. You're going to see extensions. You're going to see, everything's changed, notwithstanding the fact that you have other applications around these SMRs. And so you have a very positive demand structure, and you don't have any supply. It's just that simple. And what I find interesting is, I'll give you an example. You're going to have problems. You can't just put it into a spreadsheet. I think in the weekly email, I actually grabbed a spreadsheet off online that showed like all of the companies like that are planning on bringing on production, incremental production over the next whatever 10 years. In the year that they're going to do it, but we're already seeing problems, right? Look at Langer Heinrich at Paladin. It's supposed to be online by the end of Q1, calendar year Q1, which is next month. But they said, hey, we've had some issues, so maybe calendar, it might be Q2. So this is the kind of stuff that happens, right? You already know about the labor issues and the material issues and the expertise issues and all of these other things, right? So things aren't just going to happen. Well, the company said in its presentation that they're going to bring X amount on at this time, and I'm going to pencil that in. Well, maybe they will, maybe they won't. Mining's hard. You always have to lean to it's going to take longer and cost more than you originally thought. And so nothing's really changed except for this is a hot sector that's volatile and money comes in and money goes out. Personally, like I said, if you liked something at 4 and it's at 3 now or 2, then don't you love it unless something changed fundamentally with the company? Or are you just a speculator? Are you just a trader? Are you a tourist? So you're going to see this. This won't be the last time. It wasn't the first time. It won't be the last. So that's my comment on it. So WNA raises uranium requirements. I would go back and look at this tweet. I didn't look at the whole tweet. This is John Quake says, yes, you read that right. The World Nuclear Association has just raised their uranium requirements from last year's 170 million pounds to 175 million pounds for 2024, a close to 5 million pound increase, which immediately deepens the 2024 supply deficit for those who mistakenly use only the WNA requirements data for their uranium demand estimate. But you really need to go look at other things, right? There a lot of, if you look at this tweet and some other guys jumped in, we may be even more of a deficit because the WNA is not accounting for some other things, right? That's why it says here a rookie mistake of just relying on the WNA. So that's why you kind of got to build your own little spreadsheets and kind of take in the information and make your own. Long story short, we're already looking at a deficit that was, worse than we thought. We have supply issues now with the major suppliers, and the WNA is probably underestimating what the real requirements is going to be. Going back to finish this tweet up, says in 2022, the WNA's uranium requirements estimate was 162 million pounds for a 13 million pound increase in just 2 years. So we know that there's going to be supply issues, and we know that the demand is probably underestimated. So anyway, that's positive, right? And then Sprott Capital Partners, they put out a big piece. I'll put a link to it in the show notes. I'll also put a link to that other Quakes tweet where he has a big long why the demand requirements are being underestimated by WNA. But anyways, Sprott Capital Partners announces major uranium sector price target re-rate in a new detailed 18-page report on their covered uranium mining stocks, raising their 2024 spot price forecast to $150 a pound. Here are their new price targets for these various stocks. Look, you can read. I don't know what will happen. I'm not endorsing this report by Sprott Capital. I just put it up there for informational purposes. You can read through it and glean it yourself. Okay. What I'm trying to tell you is that, Sprott obviously is incentivized to want a higher uranium price for various reasons. So just because they think it's going to go higher doesn't necessarily mean it goes higher. I'm not endorsing their view or anybody else's view. I just put the stuff out there for your perusal, and you can take a look at it and come to your own conclusion. But again, if we go to $150 a pound, I think we go higher over time, obviously, but we'll see. And that's obviously going to have an effect on these share prices. So this is what they're saying, raising their price targets for these various companies. I'm not going to say if I agree or disagree. I don't know. I'm just putting it out there. Throw this out here. Uzbekistan to raise uranium production. They plan to increase uranium production by 1.5 times. They also plan on reducing their production costs. They plan to sharply increase the volume of prospecting work and conduct geological exploration on an area of over 1 million meters, as well as drilling work on an area 3.8 million meters for uranium production. So this is what you would expect to see, right? Everybody that has a uranium prospect is going to start drilling and trying to produce. This is what higher prices do. They start incentivizing people to. That's the reason I put on here. I don't really know what Uzbekistan's going to do. I'm just giving you an example of what you can anticipate happening as the price goes up. All of this stuff that's sitting in the ground, well, we didn't care about it at 30, 40, 50. Now we're at 100. This thing might go to 150 or higher. We better get activated. There's some potential here. And this is what you see. Then capital comes in. They'll see what they got. Then they'll make a decision, but this isn't all going to happen in 2 or 3 quarters or even 2 or 3 years. So expect to see, this is what you will see. This is why I put this on here. This is how higher prices start incentivizing activity. So I wanted to put this up here. A lot of people are, especially that are advocates for renewable energy. They like to, obviously nuclear power is a competitor as far as clean energy. You've seen that the EU's basically turned positive on the nuclear industry, even here in the US. And so one of the things that people say is that um, uh, they take too long to build, yada yada yada. That's one of the canards. And I guess what I would say is, yeah, if you build one in the US or in Europe, it might take longer, but the rest of the world doesn't take as long. And you could say that's a good thing or a bad thing. But I think that the US and Europe can streamline their permitting and to make things a little bit easier, or at least streamlined to make the process less cumbersome. Problem with a place like the US is, do you have the skill sets to do it? I mean, do you have the welding skills? Do you have the people that, this isn't just like pouring a concrete pad for your driveway. I mean, these kind of concrete pours, they have to be perfect, right? You have to do them in a certain way such that the QA QC requirements are very high. There's a lot of engineering and checks and double checks that go on. So it takes longer and it costs more. But I just wanted to put this out here because I just think that that's one of the canards that is used by people that don't like nuclear power or have a vested interest to see it not be a competitor. And so right now there's 440 nuclear plants operating around the world in 33 countries. 60 are under construction. Actually, it's 62 now. Median build time is 6.3 years. Average build time is 7.5 years. I just thought this was an interesting chart. So getting into a little bit of the commentary now, it says this is this was a editorial, I believe, in the Daily Telegraph. I don't have a link to it. It's behind a paywall anyways, but a couple snippets from the article. Basically, the name of the editorial was Europe Faces Industrial Wipeout. And here's some snippets. It said the transition from petrol to battery-powered vehicles is not quite working as planned. It was meant to spark a wave of investment, create a swath of well-paid green jobs, and dramatically cut carbon emissions at the same time. Instead of sparking a manufacturing renaissance in Europe, the pursuit of net zero is leading instead to imminent deindustrialization. It might be starting with the mighty automotive industry in which the continent once led the world, but is being repeated again and again elsewhere. Indeed, only this week, a group of major European industries launched the Antwerp Declaration, calling on the EU to relax regulations, lower energy costs, and increase investment while it still has some industry left. So we've been talking about this for a while, and people have said, we don't know what we're talking about, but this is the policy of Europe, is to deindustrialize. That's what your politicians are doing, whether you like it or not. They're doing a lot of things that they don't care if you like it or not. And if you push back, like in what's starting to happen in Germany with the rise of Alternative for Germany, they are going to try to outlaw your party. So we have to ban democracy to save democracy. It's kind of the comment from the Vietnam War. In order to save the village, we had to destroy the village. So I think that the whole political zeitgeist is going to shift. We have elections coming up all over the world this year. I think a lot of things are going to shift, what shall we say, to a more populist. You can call it right wing, call whatever you want. This neoliberal post-World War II clown world is on its way out. No one wants it. It's failed, okay? And, either people are going to just roll over and accept it and give up, and you'll have like Islamization of Western Europe, deindustrialization of Western Europe, deindustrialization in the U.S., and a breaking apart, bifurcation on political. You're going to continue to have that, or you're going to say, all right, the majority of people, I believe, are the type of people that don't want that to happen, and they've been sold a bill of goods by the pointy shoes, and they're going to you're seeing it with the farmers all over Europe. Okay, they've had enough, and if you don't allow the democratic process to take place to be an outlet, then I'm worried what will happen after that. And people could say, well, what do you mean by that? Well, I mean, look in the 70s when you had things, you had all kinds of, you had movements like in Italy, like the Red Brigades, political assassinations, all kinds of things can happen. They're going to have to deal with this immigrant problem in Europe. Okay. You have a clash of cultures here. You have the native population being overwhelmed, okay, by these immigrants. Whether you agree with immigration or not, that's what's happening. You can go on Twitter and see constantly conflicts between these two groups of people, okay, and it's going to culminate at some point. So either the native-born population is going to be subjugated, or there's going to have to be some kind of resolution one way or another. I suggest it's probably not going to be very nice how it gets resolved, unfortunately. Doesn't mean I want that to happen, but I'm not the one that let all these people in. The same thing's happening in the US. You see it, you're seeing it now in the news every day. Some criminal from somewhere outside this country let into the country, goes and kill. We just had this gal at the University of Georgia jogging, murdered by a Venezuelan illegal immigrant who already had a deportation order and had already had a criminal history here. At some point, people are going to say, and you can't suppress anymore. It's all over. This stuff's all over the internet, and people are getting mad about it. I'm mad about it. It's not just a one-off. Well, mostly these are good people. I don't know what they are. We don't. We have enough. My view is very simple. We have our own problems here. Once you deal with all of the homelessness we have here, the joblessness, the inner city issues, the fentanyl issue, then we can fix the rest of the world. Okay? We can fix the rest of the world then. I'm not interested in fixing the rest of the world until we fix our own house. That's crazy. That's crazy. And so this is what's happening. So I have to ask myself, the China. So now, of course, they want tariffs now here in Europe. Getting back to this, the automotive industry, because the Chinese are just going to roll this thing up if they're allowed to. I mean, they can make battery cars for 15 or 18. They'll subsidize. They don't care. They'll do whatever they have to do to win the industry and run everybody else out of business. So you're going to see all kinds of conflict now, trade, tariffs, all kinds of stuff. This is another thing that's going to affect, the deglobalization, if you will. Okay. And which is going to raise prices. So there's going to be a lot of issues. That's why I say it's the age of chaos. And your elite pointy shoes brought you to this. Okay. And so what's their plan? Because it's not working like they thought. And people are getting aggravated by it. And, it's directly affecting them now. Just as this is what I thought, eventually, in initial stages, nobody really pays attention because it doesn't directly affect them. Now, it's directly affecting people and they've had enough of it. Or we'll see if they've had enough. So this is you talk about sustainability. I remember one of the renewable developers I worked for, we had the construction trailer on a job site. And of course, we drink a lot of coffee. So we had a Keurig there, coffee pot, whatever. And we had those paper cups, you can order them from wherever. I don't know where our admin got them from. They're like coffee cups, they're disposable, Dixie cups. And so the VP came and said, why do you guys have plastic water bottles and these coffee cups? This is not sustainable. And I just, in my head, was like, this person's nuts, but whatever. So, they bought us these metal, ceramically lined water bottles. When you're got guys climbing in the South Texas heat, this is why we would load them up with water bottles, right? So they could hump water. Because when you're inside one of those turbines in summer trying to commission it, it could be 125, 130 degrees in there. You're experiencing convection, radiation, uh, you know, heat, you're all types of heat, right? And the sun's beating down on this thing, even though it's painted white. It's hot in there, so you got to consume a lot of water. And so these people were supposed to just like schlep this one metal ceramic line. It was just ridiculous because it wasn't sustainable. And the coffee cups, you need to get you need to get a regular coffee cup that you can wash because it's sustainable. Really? And so now we're building these huge industrial scale wind turbines that don't last forever. Um, they can't fully be recycled. So how is that sustainable? So I guess what I'm getting at is this is the current global installed wind capacity and forecast, that they last for 25 years. This goes by year of installed capacity, when it came online, when its life is over. The problem is that a lot of the turbines don't even last 25 years. They're not, for how big they are and the stress is put on them, you have a lot of issues. And so what you see is maybe 12 years into this deal, 10 to 12 years, something like that, they start repowering, which is tear down the existing turbine and put up a bigger turbine. And so we just don't have, how is this sustainable that's why I've always called these things rebuildables. Now, everybody thinks that I'm bagging on these things. I'm not. I think they're appropriate in certain locales where you have a tremendous wind resource or tremendous solar resource, but is putting, solar panels in Toronto or, you know, wind farms everywhere, regardless of what the wind is that really sustainable? What do you do with these things when they run out? They're machines. They have a lifespan, just like your car. It doesn't run forever. You can maintain it, and that's what the guys do on the sites, and you can keep the maintenance up, and so it will at least, you know, work through its lifespan that is engineered, but it doesn't last forever. It's just like an oil well. You can drive all over Texas and Oklahoma and see oil pump jacks that aren't operating because once you extract the oil, you turn off the pump jack. You don't, it's finite. And the same thing, this is a machine, it's finite. And so the resources necessary to constantly rebuild these things, they don't exist. That's the problem. And, that's why I think this is experiment. That's why another reason why I'm so bullish on nuclear power. That's really where we're going. That's the solution. And I think, we've slowly but surely are realizing that now. That's why you're seeing the zeitgeist change. This was also in the Oil Drum, an article talking about solar panel waste. We've talked about this before. Solar panels don't last forever. Batteries don't last forever. Talking about lithium ion. I mean, things have to be dealt with after their useful lifetime. They're not something you build once and it just runs forever ad infinitum. You put a solar farm up and the panels degrade over time, somewhere between 0.5% to 1% a year in some cases. And so at some point, it's no longer viable to keep those same panels, so you have to replace them. Plus, panels are damaged constantly. There's going to be damages, there's going to be failures, things are going to happen. And so what do you do with this stuff, glass, aluminum, all these other materials that are inside this thing? How do you properly dispose of it? And so the average person would just say, well, you just recycle it. Okay, well, what does that mean? If it costs you, what does it cost to do that? And are we set up to do it? And it's not necessarily the case right now. I'm not saying it won't happen, but right now we're not really set up for that. It's cost prohibitive. Maybe it will change over time. If we advance nanotechnology to the point where I think it eventually will be, yeah, you can just disassemble these things at the molecular level. We're not there yet. And so the cost-effective, easy thing to do is just throw them in a landfill. And that's really not going to work either because of the volumes we're talking about. So a couple snippets from the article here. Despite being made to survive for many years, all solar panels, like most things, eventually lose their usefulness. At that point, owners need to dispose of them in a way that does the least amount of damage to the environment. In addition to components that are potentially dangerous for human consumption, like lead and cadmium, solar panels utilize a variety of other materials such as glass, aluminum, and silicon. Some of these materials can pose threats to the environment if improperly handled and thrown into landfills. Then it goes on talking in the article about different laws and regs that have been put in place in the EU and the US about this, but this snippet addresses that. Despite these laws and regulations, data indicates that less than 10% of the United States decommissioned panels are recycled. Likewise, the recycling rate of solar panels in the European Union is about 10%, despite EU law mandating that solar panel producers recover a minimum of 80% of each panel's mass. So that's interesting. So they have a mandate to recover 80%. So this is what government does. Well, if only 10%, I don't understand, me as John Ptolemy here, understand why if the EU has mandated that 80% of the mass be recycled and only 10% is, why is that? Because they mandated it. When you mandate something from the EU Commission, it should happen. Just like when the Congress mandates something or a state legislature mandates something, it should just happen. See, this is the conceit of the fools that don't know anything about anything. Okay, the political class that more than likely are, psychologically damaged, sociopaths, lawyers, things of this nature. They don't know anything about solar panels. They don't know anything about landfills. They don't know anything about anything. All they know is I got to get elected. If I'm in the House of Representatives, I got an election every 2 years, and so it's not going to be my problem anyways. I just say what I think is going to appeal to the people that are going to give me 50% plus one vote to get back in here so I can keep the game going. That's really what this is about. And so how do you really get this done? Okay. Because if they mandated it and it's not happening, are there penalties? Are there problems? What happens if you have to post a bond when you put this thing together to pay for the decommissioning and the recycling of these panels? Does that at that point make the project not viable? Probably. And so again, we have this free riding going on because we had this political zeitgeist, I think, that is starting to diminish around we have to do this because if we don't, the earth's going to burn up. Look, I don't believe any of this because I'm going to go on a rant here. Let me just finish this and then I'm going to go on a little bit of a rant. According to the estimates from the International Renewable Energy Agency, the world could contain 78 million metric tons of garbage from solar panels alone by 2050. That doesn't include wind. Okay. But again, guys, I'm not criticizing these industries. What I'm saying is the adult person understands that if they want to have an industrial technological society, it requires tremendous energy inputs. And so trade-offs must be made. And so when you say, oh, I'm anti-nuclear, or I'm anti this, or I'm anti that, well, what do you want to, this is what, these people are children. They think like children. It's not magic that, you put the plug in the wall to charge your iPhone so that you can message with your other protesters to meet and glue yourself to the road in the central business district. That electricity is produced by machines that need energy inputs. These people evidently can't conceive. These are children, and we don't let children make policy because they're not adults and they're not capable of being rational and pragmatic and making trade-offs, because that's what life is about, making trade-offs in your personal life and as policy. There's pros and cons to everything. What can we get the best outcome for the least amount of, pain or impact? That is the policy we should be looking at. Or we can say, this is why I don't believe any of these politicians or these activists. Okay. If you actually believe that we have 10 years or the earth's going to burn up, then you have to ban air travel tomorrow. All internal combustion engines don't sell anymore. People have to be moved into 15-minute Soviet style apartment blocks to minimize their damage to the impact. All this stuff that the WEF is saying has to be implemented if you actually believe that. But if you think for a minute, most people don't believe it. And when they hear that, they won't go for it. And so that's why it doesn't happen, okay? Because it's not really true. There are people that actually do believe that the earth's going to burn up in 10 years. They'll cry and sob. I just saw somebody was put in jail for a couple of years in the UK for doing some type of activism. And, at their sentencing, they said that, it's all worth it. So they're going to spend time in prison, give up their life for something that's not even really going to happen, or they can't do anything about anyways. Because here's the simple fact, what I've said before. You can go and not burn molecules in the West. You can do whatever you want to do here in the West, okay? It doesn't matter because the other, 7/10 of the world, the other 7 billion people in the world want your lifestyle. And if you don't burn the oil and gas here, if you don't build the nuclear reactors here, if you don't use the coal here, they're just going to do it over there, okay? Because they're not going to stay poor. Why would they? Okay. And so that's just my view, and I think it's reality. I never bought into this. Yes, the climate changes. I mean, you change it. These people change the definitions. Of course, the climate changes throughout the millennium. That goes without saying. You think driving around in a Tahoe is what affects it? I don't buy it. Okay, I never did buy it. This big orange thing in the sky that's 93 million miles away, that probably has the most to do with what's going on Earth as far as its climate. Okay, take that thing away, and this is an ice ball. So, it's kind of, I think, taking that into consideration. The problem is that the politicians can't control that and grift off that. They can't tell the sun what to do. They can't tell the different, rotation patterns of the planets and the cycles that they go through. They can't control any of that, but they can control you and extract revenue from you by getting everybody wound up about this apocalypse. If there was a true apocalypse coming, then we need Soviet-style draconian central planning immediately. I don't see anybody advocating for that because it won't fly. So, we'll see how it goes, but I think that this is unwinding now. People have seen through it. The window of opportunity for this nonsense. Again, I think it's appropriate for solar and wind to exist as part of the energy mix, but you're not going to run the United States off 100% solar and wind. It's impossible. It's not going to happen. It's appropriate for areas where you do have the necessary resource, but that's not everywhere, So we've learned that already by looking at Germany, what they did. And I think I heard somebody point out the other day, I've heard several people point this out just to finish up. I think over $5 trillion has been spent on, this renewable green energy push over the last, what have you, 10 years or so. And oil consumption has went from, or hydrocarbons as a component of energy went from 81% to 80. So it's just not going to happen like people think. So anyway, I think that this is why do I bring this up? Why do you care? Why are you listening to this? Because we've underinvested. This attacks, these underinvestments, insurance companies, banks saying they're not going to invest in hydrocarbon development. This is going to have an effect because that cyclical underinvestment that happened anyways in new reserves was exacerbated by all of this ESG madness and failure by governments and financial institutions. They just made it worse. So that when we inevitably do have these shortages, which I think are coming, supply issues, believe me, I'm not a Malthusian. There's plenty of oil and gas in the ground. There's plenty of uranium in the ground. There's plenty of copper. But if you've done all this underinvestment, if you've passed legislation to put access to these things off limits, at some point there's going to be a supply issue. And I think we're rapidly heading in that direction. And that's why we discuss these issues. Okay, guys, that's it for this week. We appreciate the support and look forward to talking to you next week. Thanks.